knew, by the way, with the election in 2024, that there was going to be an economic restructuring. This is, in fact, what President Trump ran on when he talked about and said at I don't know, 200 plus how many rallies and political events that tariffs were absolutely going to be something that he introduced into America's economic model, which is a huge turn away from the global economic model that has existed really since the late 80s, 90s, and on with the accession of China to the World Trade Organization and the expansion of the petrodollar across all of these markets. Well, this has been something where, look, when I look at the price of gold, I say, look, this is a way to hedge against all of those things. And it's something to learn about where, if you got into the precious metals market, if you got into gold back during the pandemic, you're looking at 3 times where you are now. So I wanted to get you in on your analysis. I wanted to get you in on how you look at the big picture, geoeconomic, geostrategic, and the effect that President Trump's tariffs are having on the entire system.
Yeah, thanks, Jack. Well, look, to understand gold, you have to go back and learn a little bit more about the history. So essentially, in the last 5 years, we've had the money printing machine fully blasted. And everyone was talking about inflation, and they were expecting gold to quickly react to that. It's not a tit-for-tat movement. It takes some time. But in reality, gold is more than just a hedge against the currency devaluation. It is showing us that there is a lack of trust in the monetary system, and there's a lack in the institution. So with that, gold is not only acting as a way to protect and preserve, but it's also becoming a growth asset. So year to date has outperformed the S&P 500. It has outperformed the NASDAQ. NASDAQ is down about 11%. Gold is up about 26%. In reality, that is not the main purpose of gold. But because of all the economical weaknesses that we're seeing, as a matter of fact, just today we got the weaknesses of the first quarter. Now, when President Trump campaigned, as you mentioned, he was talking about tariff. And it's not a surprise that in the last 3 months, we've had more than 6,000 tons of gold migrate from Europe to the U.S. I think people underestimate how important gold is. And President Trump is alluding to that. For example, not too long ago, he tweeted on his social that he who has the gold will make the rules. The U.S. Secretary Scott Bessent talked about how we have to go through an economic detox. So when you look at gold, like I said earlier, it's no longer a luxury. It's almost a necessity to give you that additional layer of protection.
So the idea being that is that it's an insurance almost against all of this tumult, all of the turbulent times that we're seeing right now. And this has been something where, by the way, when it comes to the tariffs, we know that President Trump is engaged in a series of negotiations. He's working on deals in some areas. Tariffs go up, tariffs go down. The entire point is that these are levers that he's using to really reshape that version of the global economy that we currently see it. And he's clearly seeing it through, despite the media headlines, despite everything else. This is something that he's really committed to. And I understand, by the way, I've got a retirement account as well. My wife kind of runs that stuff, as you guys know, by the way, because you guys have chatted. But she runs that stuff more so for us. But it is something that we need to think about, that we have to make sure that our family, just like any other family, is in a good position while we go through these waves. Does that make sense?
Oh, absolutely. I think it's not about the headline. Forget about the mainstream media. Everyone's talking about the tariff, but no one's really talking about the problems that occurred in the last few years. President Trump walked into a national debt of $36.5 trillion, okay? Interest expense costing us over $1 trillion. Those are not something that will be fixed overnight. Those will take some time. So instead of focusing on the narrative of tariff that it's causing disruption in the market, one has to look back and understand what has led us to this scenario and what type of situation that we need to do. And another thing that I want to share, a couple of days ago, I had a discussion with my wife, since you mentioned your wife. I hope she's been happy with the investment, and maybe we should do a quick review and give her some additional updates.
Oh, the minute you start asking Tanya Tay about that, you better make sure that you schedule at least an hour, maybe an hour and a half for that one.
Oh, no, we'll be happy to. We'll be happy to, of course. It's the least we could do, and we appreciate how much support we've gotten from your program.
No.
Looking back, yeah, it's the idea that I wanted to mention when you talked about your wife is, 3 days ago, the issue happened in Spain. Okay, all of a sudden there is a lack of electricity. Everything is out. That is when people will start to understand the power of having something physical and tangible that is not tied to the grid. It's just like insurance. You want to have it before the accident, before this scenario occurs. So what I want to remind people is that this is not the time to look at your charts of gold and say, can I time the market? Will the price drops? As a matter of fact, we had a little bit of a break. Gold peaked at about roughly 3,500. Right now we're at about around 3,300. So it's no longer about timing the market. It's about constantly allocating and making sure that you're in a position. So in worst case scenario, if something were to happen, at least you're protected. Specifically when you're the head of household and someone depends on you, more so the responsibility rests on your shoulder.
And it really comes down to that. It's this idea that you're working with a group of people and you're also talking about these issues that we all talk about. I mean, my gosh, and we haven't even really covered it on the show. We were wrapped up in a little bit of news myself, but this idea that all of a sudden, yeah, you're right. There's no power. There's nothing going on. You have to figure out, oh my gosh, we're going to, South Africa levels of economic, economic stability. Where, by the way, if you don't know what I'm referencing, in South Africa, they have a situation where they call it load shedding. I have no idea why they call it that. It's some weird British thing, but they call it load shedding. They said there's too much load on the system, so we have to shed off the load so the system can hold it. So what do you mean? Well, we turn the power grid off and they do the rolling blackouts nationwide in the country of Africa. And what does this come down to? This is the competence crisis. So suddenly you're talking about, boom, how many hours do you have before there's lines at the grocery stores right around the corner, and then boom, nothing on the shelves, just like we saw during COVID, like I was just talking about. The gas stations getting swamped, the stores suddenly, well, guess what? If you don't have, your credit card machine is working, how much cash do you have, right? How much that do you don't change for big bills, et cetera, et cetera. And that just happens within hours. And that's something where, people are saying, oh, no, that's never going to happen. So really? It's happening right now in Spain.
Exactly. And you just have to pay attention to what the smart money's doing. Like central banks, for example, love them or hate them, they're not playing the game to lose. They're planning for the next 3 to 5 years, and they're very proactive with their measure. Essentially, they're voting against a currency that is constantly being devalued. And as a result, which is the alternative, gold is where they're allocating and they're increasing their position. So you're right. It's that preparation comes proactive. Unfortunately, a lot of retail investors are almost late to react. And we kind of saw that in 2020 when there were a lot of emotional buyers. People need to understand that the most common mistake of investing in gold is comparing it to a stock. Gold is an actual form of wealth. You have to look at it through the lens of 3 to 5 years. So that way, when you do need it, you have something to actually depend on. And speaking of the central banks, let's look at our own central bank. Right now, the Federal Reserve, I'm sure you covered it in the last few weeks, there was a lot of back and forth about potentially lowering interest rates. Well, we're at a point where the cost of borrowing has increased. And given the fact that the government needs to borrow a little bit more, specifically when we have $5 to $7 trillion of our debt coming to maturity, we want to make sure that we get lower interest rates. So in the next 2-3 months, we're going to see what the decision is going to be. And when the interest rates drop, essentially, we might have an impact on inflation, and that's also a positive for gold. This is not to say that you just have to be all in gold, but a lot of the roads right now lead into gold. So long as central banks continue to buy, so long as we have a little bit of an uncertainty in the market, and we have a system that is showing the cracks in some of the early warning signs, it's more important to have gold than ever before.